Hello and welcome to Indian Markets Unveiled, a daily market podcast where we talk about all that's buzzing in the stock market. We try and tell you what one needs to look out for, watch out for before the market starts. The domestic markets are backed by a lot of triggers, and as well as we can say that the global market triggers are also impacting the domestic markets to a large extent. So let's get started for today's session. Talking right about the global market, and then we deep dive to domestic markets. Global markets today are showing signs of negativity, as we did see that the Gift Nifty started with lower indications, which is an indication of a negative start, a red start for Indian markets. However, if we take a brief look at what happened with the US markets on the Friday session, the US futures were higher after cash markets ended largely lower on the Friday session. US markets ended largely lower on Friday, with Nasdaq slipping more than 1%. Just like Indian markets, it was a busy earning week for US markets as well, wherein we did see the indices impacting because of the earnings coming in. Again, just like Nasdaq, S&P 500 did see some signs of volatility, but of course it did end with a positive note of around 0.5% to mark its second positive week. US preliminary consumer sentiment data slumped in October, which was an economic indicative action. The number was down around 7.5% on a month-on-month basis. Again, the US 10-year yield did rise to 4.65% ahead of Powell's speech this week. So, of course, Jerome Powell's speech during the week is one of the major triggers which will come in from the global markets. If we talk about the European markets, they ended lower on Friday, where CAC DAX were down more than 1%. Talking about the energy pack, oil prices did see some ease as investors assess impact of Israel-Hamas war. To be precise, Brent crude is trading somewhere around $90 to $91 a barrel even during the session today. The same impact is seen in the safe haven commodity. The precious metal gold hovers around $1,900 in the global market as Middle East conflicts intensifies. So clearly the global markets seem to be quite volatile, as US markets did see the heat in the Friday session. Again, today morning, Gift Nifty opened with red signals indicating a start in the red for Indian markets, and Asian markets were lower in early trade as well, where Nikkei was down nearly 2%. Also, one should keep an eye on the economic indicative action, and that is the result why we also see the global markets impacting. Asian markets are dipping as investors look ahead to China GDP and Japan inflation data, which is another economic indicative event one needs to consider. So this is how the global market looks like. But let's take a look at what is the impact and what are the triggers coming in for the domestic markets today. Let us now try and understand that how will the trade setup for Indian markets look like this morning when the markets open up. Considering the last week was quite volatile for the domestic market as well as the global market, as there were many global triggers and domestic triggers doing the rounds along with the result season. So to begin with, the market is expected to take support at 19,600 levels, while 19,800 to 19,850 level is likely to be a critical level for marching upwards towards 19,900 to 20,000 levels. As we clearly see, 19,600 to 19,850 is the support and the level, a very important level which one needs to consider. On October 13, that is the Friday session, the market managed to cut down losses by more than 100 points on the Nifty and settle off day's low, holding the 19,750 on closing and taking support at 19,600 on an intraday basis. Talking about Sensex, it declined around 126 points, while the Nifty 50 fell 43 points to close at 19,751. Of course, we can say that the bulls were able to protect the level of 19,600 during the last trading session, thanks to the strong open interest built up at 19,600 strike price. Similarly, the strength may continue as long as the index remains above 19,600 level. So clearly, one need to watch out for this mark, 19,600. Also, one can assume that the decisive fall below this mark, that is 19,600 mark, might trigger serious long unwinding in the market. Till then, a buy on dip strategy is which one can consider in the market, as it is a favorable level, considering 19,600 sustains. Again, if we talk about the resistance on the higher end, the resistance is visible at around 19,850, and above 19,850, the index might move towards 20,000 level. But one needs to consider the volatility which the market has witnessed in the last week and be very cautious while trading in the markets. Again, if we talk about the broader market indices, they also ended moderately lower, with the Nifty mid-cap and small-cap indices declining in the Friday session, while the volatility, that is India VIX, ended flat at 10.62 levels. So clearly, the crux for indices says that for Nifty, 19,600 is the level where the index will take a support, followed by 19,625 and 19,561. On the higher side, 19,800 can be an immediate resistance, followed by 19,836 and around 19,900. Also, one should be very clear that the results season has kick-started, and of course, the eventual impact of the upcoming results and ongoing results during the session will clearly be seen on the market. Now, let's talk about what clearly happened with Bank Nifty on the Friday session. After gap down opening, the market attempted nice recovery towards previous close in the later part of the session, but failed due to selling pressure, and finally it closed lower as well as below the opening levels, which is 44,322. During the session, Bank Nifty witnessed a deeper correction. However, there are chances that this dip will be bought. On the downside, 44,000 to 43,800 level can be considered as crucial support zone, and until that, this level is not breached on the downside, we shall expect a recovery till 45,050 level. There are chances that 45,050 to 45,350 in the Bank Nifty from short-term perspective can also be seen. So clearly the crux is one needs to consider 44,000 to 43,800 as crucial support zone and 45,000 to 45,350 as the resistance zone. Apart from the many varied triggers and events which are doing the rounds in the market, the biggest event this time is the results season which has kick-started. So on the 16th of October, which is Monday session, HDFC Bank, Federal Bank, CEAT, ICICI Securities, Bank of Maharashtra, Cyient DLM are the few companies which will post its result. Apart from that, there are many cash companies also which is going to come up with results on the Monday session. Now let's quickly take a look at the stocks and news which one needs to consider, the news which came in after the Friday market close and the ones which may see an impact during the market opening on the Monday session. To start with, Tata Motors is in focus. The commercial vehicle major has entered into share purchase agreement with certain investors for sale of around 9.9% stake in its subsidiary Tata Technologies for 1,613 crore. The next stock in focus is Avenue Supermarts. The D-Mart company, Mumbai-based company that owns and operates D-Mart stores, has recorded a 9.2% year-on-year decline in consolidated profit at 623 crore for quarter ended September 24, impacted by lower margin and high base. So clearly a result-specific move which can be seen in Avenue Supermarts. In Q2 FY23, the profit was supported by lower tax cost. Revenue from operations grew around 18.6% on a year-on-year basis at 12,624 crore. Next in news is Bajaj Electricals, as the company has received a supply of service contract worth 564 crore from Power Grid Corporation of India for and on behalf of its SPV, Special Purpose Vehicle, Anantapuram Kurnool Transmission. So Bajaj Electricals and Power Grid, both the companies need to be considered and in focus during the session when the markets will open up. Tata Steel Long Products. This company and the stock price needs to be considered as the Tata Group company's net loss for the quarter ended September 24 narrowed to 135 crore from 333 crore in year-ago period despite lower top line, aided by lower input costs. Revenue from operations fell around 9% on a year-on-year basis at 1,734 crore during the quarter. Cement manufacturing company Dalmia Bharat has recorded consolidated profit of 124 crore for quarter ended September 24, growing at 121% over year-ago period, driven by healthy operating numbers with fall in power and fuel expenses. Revenue from operations for the quarter grew by 6% on a year-on-year basis at 3,150 crore. Cement volumes increased around 6.6% on a year-on-year basis to 6.2 million tons, which was in line with estimates. Lastly, let's quickly take a look at the FIs and DIs data. The foreign institutional investors bought shares worth Rs 317 crore While domestic institutional investors sold 103 crore worth of stocks on 13th October, provisional data from the National Stock Exchanges showed. So that is how the market scenario and trade setup looks like before the markets start on the Monday morning. We tried to cover all the important aspects, triggers and events along with the news which one needs to consider before starting the trade. With this, we come to the wrap of Indian Markets Unveiled for today's session. To sum it up, the market would be focusing on the earnings season and one needs to consider that and along with it, the other triggers which are doing the rounds in the market. Nevertheless, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Dev & Choksi have our exclusive research services which are powerful and successful. To avail our exclusive services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on the wealth building adventure together. Thank you.